There is a substantial risk of loss associated with trading forex, binary options, stocks, or equities, collectively, asset classes. Only risk capital should be used for trading. Trading in any asset classes is not appropriate for everyone. Past performance is not necessarily indicative of future results. No representation is being made that investors will make profits, or will not sustain losses. Before trading in any asset classes, investors should consult with their professional broker, financial advisor, or financial consultant to determine whether trading asset classes is appropriate. Investors who trade in any asset classes should only do so if the capital used for this purpose represents funds that an investor can afford to lose without adversely impacting the investor's lifestyle. No trading strategy or methodology is without risk of loss. No trading strategy is risk-free, and no trading strategy can guarantee profits or freedom from losses. Investors risk losing the cost to execute any transaction, including associated commissions or fees. You should carefully consider whether trading in any asset class is appropriate for you in light of your investment experience and financial resources. Any trading decisions you make are solely your responsibility and at your own risk. None of the statements or materials in the Auvoria Prime chat rooms constitute a solicitation or recommendation to buy or sell.
The last week was probably a great additional, and I hate to say that, right? An additional example of risk management, right? So in this particular case, I want to start off with, and let me just set this up here. I probably should have already done this. Actually, I had that set up. Looks like I deleted it. Anyway, guys, this was kind of fun. Going into Twitter here. Thought this was awesome. I'll just keep playing this while I'm talking about this. So let me just mute this. So for those of you who haven't seen this, this is a farmer plowing what's called a fire break into a burning field. Seeing as though I used to live in the outskirts of Philadelphia, I actually had a number of farmers as clients out in Lancaster County where the Amish are. This is just absolutely one of the single best examples, non-market related, of risk management. So it's a pretty dangerous move to pulling this off. In the course of the last week, as I've been talking about for, hell, I don't know, seems like the whole damn year, right? As soon as the euro got below a certain level, and most importantly, your first trigger was the US dollar getting above 94.50, we were probably going to see a vicious rip up, which is exactly what happened. I know we've paused a little bit, but I talked about this on Tuesday last weekend, but I always know when things have gone awry, because I get contacted by a whole bunch of people. Hey, what's going on? And and inevitably, as I said to a couple of the owners of the company that contacted me last week as well about just, hey, what's going on? And I had to ping back almost everybody that asked me. I'm like, well, didn't you listen to any of my calls? No, I was busy. I got it. Again, risk management can even be overlooked at even the highest level, or C-level in this case, of management, right? Not pointing any fingers, but I think it's important to understand that, one thing you will always get from me as a mentor, certainly as your advisor and you're a client, you will get brutal honesty from me. Many times it's brash, many times it's unscripted, oftentimes it is always in the best interest of the client or the student, but it isn't delivered with a lot of tact, right? So, this, and we can just watch this over all day, right? I mean, it just seems ridiculous, right? But I love this example of risk management. So we'll get out of that screen because it's driving us nuts. So on to the charts. Always be aware that your settings inside that are anything outside of the box from what the developers talk about. Remember, each of them have a call each week, which I highly suggest at the very least you watch the recordings of mine and theirs, or the respective software that you're using. And don't go outside the box unless you have tons of capital that you can afford to lose. And I'm talking in the thousands and thousands of dollars, right? In many cases over 100 grand. But I told a story last week of, we're getting some moving quotes because we're moving to Florida. And, I ran across some moving guys I talked about in the story. Then, he's like, well, he's like, I saw your name on Google, and I said, yeah, I'm a fairly well-known financial advisor. We run a new merged firm in Florida called First Down Financial. And he said, he's like, yeah, I got like $45,000 of all my money in Bitcoin. I'm like, well, hey, great. I'm like, how have you done? He's like, well, I turned $4,000 into 45,000. So then I asked him, I said, so what's your risk management strategy? He's like, what do you mean? And I said, well, what is what are you going to do if you wake up the next day and it got cut in half? He's like, well, I don't think that's going to happen. This guy was just adamant that he knew. He's actually one of the owners of the moving company. So we chatted for a while, and I explained, what risk management is. But it, again, just a continuation of, everybody out there and all the top builders at Auvoria, they're sick of hearing me say this, right? But they really have gotten into the habit of making sure that everybody in their up and down line knows what's going on, at least generally, right? Some teams do a better job than others, but the fact that a couple of teams running Flash didn't pay attention to what I said, maybe they didn't have the time, and maybe they didn't understand because I can only speak in English. Obviously, I don't think it gets translated, but a lot of the European leaders know that I can. You can always call me, and happy to. But I'm always preaching, just go in the up and down line, and the stepping in front of the freight train, or essentially letting the software operate in a that type of move is just, it's ludicrous. So I'll show you what I'm talking about. This is a weekly chart of the dollar. Oftentimes, if you have what I affectionately refer to as air pockets or gaps or zippers or whatever, right? You get above a particular area and then the market just absolutely rips above this. I would say that whole teams of people in Auvoria over the last couple of weeks didn't heed any of my warnings. And it is just another further example where I could talk for days on this, of it affected their trading in terms of the systems, right? I would want to be long anything that is dollar related, or short thereof anything that's against, right? So I'm not going to beat a dead horse, but I just wanted you guys to see that. Thought that was kind of fun. So right now it's probably going to be established to be higher, but I wouldn't be banking on this red line here at this 95.17 area. I really would. I mean, this is true support right here. There is no line drawn, but there's the support there. So the exact area within, I don't know, 10 pips of where it ripped past that I had talked to, right? So any retracement down to this area or its corresponding areas in other currency pairs, I think offers an opportunity to, in the case of the dollar, get long again, or in the opposite, let's just take a look at Euro USD. So coming back to this level, right? Notice this is the exact point that broke lower where the dollar broke higher. So this should offer an opportunity, since it is now broken. Remember, it's probably easier if we look at this on a weekly, get rid of some of the noise. But this offers, this is the same area here. Just double check. Yeah, so one spot 1448-ish, so essentially the 1450-ish area right here should offer some resistance against. So oftentimes when I show stuff like this as an example, we use a term in trading called, sell the rips, which we may rip back up to in terms of Euroland, although I think there is enough damage that's been done in a lot of Forex traders' accounts, whether they're institutions or mutual funds that are positioned. I don't think they expected, because most people are just squawking about with all the debt that we're laying out, the devaluation of our currency over the longer term, which I do expect to happen at this point. But all of the inflationary and what have you risks, I think, have surprised a lot of traders by putting billions of dollars in capital back into the dollar, or at least selling in other currencies, which has the same fulfilling effect, that has really pushed the currency up, right? So, and for what it's worth, again, in that sort of scope of honesty, I haven't been all that plugged into this stuff, right? But I don't really need to be. I could just look at the charts and go through the news and just catch up on what's going on in less than 10 minutes and have a good feel for what took place. So there was probably other forces at work in this. But for now, those are my areas I'd stay away from. Sell the ribs. On the euro. So here's the pound. Let's drop back to daily, see if we can glean anything from the daily chart first. Failed attempt at a rally, if you ask me here. Looks like we probably want to go below this. Pound's been a little stronger than the euro, obviously. Let me just take a look at the whole shebang compared. A lot of times I like to jump between FinViz and TradingView and just look at. I just like seeing everything in one big screen. There's multiple ways you could set it up, and FinViz isn't the answer to all that. I mean, there's other ways to do this, but I just like to look at everything in context of, it's sort of like my macro screen. I feel I want to know what's going on with bonds, and to a little bit of a further credit analysis degree, what's going on in bonds and some of the European countries' bonds as an additional piece of analysis. But then I want to start off with the dollar and just move through and see what's going on from the daily perspective. Keep in mind, each of these candles, be it red or green, represents a single day of trading during these sessions. And, a lot of people didn't think we were going to be close to 96, right? And correspondingly weak in both of these areas. A little bit more strength, obviously, in the pound. It hasn't sort of hauled its weakness in the Canadian dollar, but in all fairness, this really rallied on sort of a natural resources ramp, if you will, and precious metals ramp. It's the same reason that we ramped in Australia, almost the same trade. You can see how these charts look similar to each other. Let's give Starbucks a reason to charge you a fortune. No, I do not give Starbucks any of my money. So let's go to calendar. So at least in the financial services biz, most of us are off next week. I will be. We're actually going on vacation. But in terms of currency land, you've got a holiday on Monday in Japan, so that should at least cool down the yen for a little bit. Do know we've got that manufacturing PMIs, anything related to a manufacturing hotness, if you will, or certainly core inflation prices you want to pay much closer attention to. But on Wednesday, we do get the FOMC minutes. I don't really think much is going to come out of this because it is the evening before Thanksgiving. And then obviously the holiday on Thursday in the U.S. Do note that Governor Bailey's speaking next Thursday. So if you're into any trades or plan to be in the pound, do be aware of that. I would not be trading during that period of time. So that's it for the Forex Factory. Let's take a look at some more charts. Those trading currencies had a very flat, this isn't the easiest to see. Let me just spread this out. S&P 500 daily. There we go. A little bit larger. S&P 500 daily pullbacks, and then we had some rips back. It's like this 4,700 area poses our resistance as of now. It's basically a century mark. Anything that's a big area like this, you usually see a pullback upon its first touch of that area as a new high. We've had 4 attempts at that, and we've had a pullback. We could do nothing next week. Keep in mind, from risk management standpoint, volumes are typically lower during holiday weeks, and for that matter, also into December. That doesn't mean that things will be calm, right? What that means is that it'll be lower volumes. We always like to joke the junior traders got to man the desk while all the rich ones get to go on vacation or wherever, right? But it could pose a lack of liquidity, which could pose volatility, so just be aware of that. A lot of some of the best traders in the world will take off trading in December. And so let's take a look at the Qs. New highs, obviously Nasdaq's driven by a lot of stuff. Actually, I have not really looked at what did Musk and company do last week. I say a big pullback and then they rallied again. So that's probably the reason Nas is pulling highs. You got these two biggest dogs in the Nas, which is Tesla and Nvidia, and Apple. What is this buy point here? What the hell? Put that line there. Is that a buy point? Tell you, this thing's been an absolute monster. Unbelievable monster. One of the best performing stocks next to Intuitive Surgical I've ever owned. Anyway, back up the currency charts here. So that's what's going on new highs in the Qs. Obviously wouldn't be chasing this stuff up here. Just my opinion. Do your own due diligence. So Euro, we've addressed that daily. Let's go back to CAD. Been inside this balance area on a daily chart for quite some time. Don't expect any breaks. Same thing. Looks like we've got a lot more balancing to do if anybody's trading the yen. Anybody's trading dollar Swiss, a very long consolidation. Looks to continue sideways trade. Now, with the weakness down in Aussie land in relation to the dollar, we've got some pretty big areas coming up as far as support. And this first one's the right around the 71, maybe a little bit higher, right around the 71.70-ish area, spot 71.70-ish area. Ultimate support, which we had a hammer reversal off of. This was a while back. It's about a year ago. Oh, wait a minute. That's not true. No, this is just in the end of the quarter. Ultimate support down here at 7,100, right? Let's take a look at Euro GBP. Do note this shouldn't be a surprise. We've been in, at least on a weekly chart, been in a long consolidation over a long period of time. But we are down near the very lows of this in terms of the euro's value compared to the pound. The ultimate bottom that we saw back, this was pandemic related reaction, is this 0.8279. We get down to this area, more than likely, and I can't speak for any other currencies, and this is not a pin action statement. It's probably just specific to this. We get down to this area quickly, somebody's going to probably be defending it, just because this really wasn't that long ago. I always look at longer term support areas, and sure, they can have reaction, but the big areas, what I like to call the extreme outs from a particular position, especially an area like this, you usually will get a reactionary buy off that. And then after that, more likely, it looks like it's just going to continue through. Who knows? We could spend some time around. It could be dead wrong in this one. And it can continue to, just consolidate sideways. The more that it does, in most of these patterns that play out, the more the foolish folks will be setting stops down here, right? And then you have these stop hunting algos that just like to terrorize retail, seeing all these stops piling up in terms of order flow. Just makes them want to get out and get them, just like probably an absolute bananas amount of longs, stops, down there below the line on the euro. Same thing with above 94.50. At some point they're just going to go for them, right? Even though it could be a complete head fake and it could go back down inside and trade sideways, or just go back down inside the balance area, which is actually the same thing. Just call it Steve speak. Doesn't mean he can't go up and blow all your trades out, right? GBP CAD. Now I hope Neo has been taking this. This is obviously a weekly chart, but if we go to the daily, we had solid support, just bounced right off that. So I'm hoping Neo recognized that and had a pretty good day, at least on this 17th of November. What was that, Thursday? Take a look at the weekly. What else? A couple questions I got last week is oftentimes these colors designate the strength, but I don't really put any more weight in that than another. It's almost like if you've seen enough of this, you can just draw the lines and you don't really need to see them on the screen eventually when you get good enough at this, right? But there's a lot of other factors that goes into the squeeze zone indicator. There's about 14 components to it that Dasan has designed, and it has been ridiculously accurate to the point where it's replaced most of my other support and resistance areas, with the exception of Fibonacci stuff, which I don't show on these screens. GBP Swiss, I don't really get much into this. AUD CAD, did want to note the compression that continues to form. This is what's called coiling. So in my opinion, we could break from this. Do note this area. If you're trading or your software's trading this, in anything under this 9100-ish areas is pretty solid support from a resistance standpoint that became support just over the last a little more than a year and a quarter. AUD NZD down towards the bottom of the range again. GBP NZD, albeit surprisingly enough, as crazy as this was back in the day, exhibited a heck of a lot more calmness. Spot gold, it's on a daily. We broke from that area, so the support area, if someone's trading this, which should hold the support if we go back to it, this 1832 area. Just keep in mind usually what happens, and let me actually pull my notes up again. I want to see this. So let me just go through some of these notes with you guys since we're on the subject of gold and all that other fun stuff. Is the global economies, I think that the challenges they're going to face is slower growth, rising prices, shipping woes, and shortages. I think it's probably a surprise that the people in the know a heck of a lot more about how container shipping works than we ever wished we had wanted to know, right? But the problem with supply chains is you more than likely will have an overreaction from that. And there is a pretty good chance, and it looks like the market, at least as far as the credit markets are concerned, are trying to price in a deflationary potential move from the overreaction to try and get supply chains fixed. It's actually a real problem. This happened a bunch in the 70s. But I was a toddler at the time, so I don't know much about that. But so like in 2021, most of the world GDP had about a 6% gain, at least as far as developed markets. But we had, just a big, it was half of that during the pandemic, right? No surprise. But the emergency stimulus programs are winding down, maybe not in the US because they keep signing more crazy ones. But the pandemic essentially is fading. So at least it's measured by case counts and fatalities in most of the world. Outside of Eastern Europe, where cases are rising, things are looking better. So with luck, we'll get inside that. But the problems that are faced in a lot of countries, it's supply side bottlenecks are rampant. So I've talked a lot about this the last couple of weeks, and obviously soaring commodities prices, with the exception of lumber, and shortage of key components are holding a lot of businesses back in terms of purchasing, because they're spending so much money on shipping. At some point, that's always going to get all worked out. But what does that mean for the U.S., especially for U.S. exporters? It's a mix of difficulties and opportunities. So a rising dollar is a headwind, since it makes American goods more expensive for foreign customers, right? So if the greenback is likely to gain versus other currencies as the Federal Reserve tightens monetary policy, which could really kick off more, as I'd mentioned, next summer, that'll make it hard to shrink the trade deficit, now running approximately around 70 billion per month. So what this all means is, as I talked about last couple of weeks, it's just become harder and harder to try and figure out, how all types of, central banks are going to react to changes in policy, and how that's going to change money supply. Because ultimately, those two are as very, very important factors that affect the currencies of any country, primarily the dollar. So it just becomes more of a cloudy situation to try and plan it out. But what we can do, at least as far as technical analysis on charts, is look to see where precious metals are going. Is that affecting? I always try and stress, one of the tougher things to prognosticate in this biz is where commodity prices are going to drag corporate profits around, right? Thus equity markets, right? Stocks. Or where is policy from central banks going to drag money supply around, hence changes in currency? So you've got all kinds of headwinds and a lot of ripples here and there that could turn into tsunamis, but quite haven't yet. So it's almost like all these bubblicious markets are on, meth, if you will, and they're not seeing that, you're out of drugs or the music's going to stop and we have no idea how many chairs are left to sit on. So those are all of my concerns. But as Art Cashin, he's that great guy from UBS Securities, he's always on CNBC, the older guy from the floor, one of the floor operation guys from the NYSE. As Art Cashin would always say, the markets can remain a lot more irrational than we can remain liquid. So take that for what it's worth. I think you guys are having some problems with some of the hearing. If you're having any issues, and it's not if it's your computer related, you can always reboot, but you can listen to the recording as well. So, all right, so just take a look at gold. I would imagine this 1831 an ounce area is probably going to be support on the daily. Notice where the resistance is, which again, more kudos to our little indicator here in terms of its accuracy, right? Stopped and turned around right on resistance. The weekly chart. In terms of flow and market profile land, value area low on this 1570-ish area. Value area high and this is on a weekly chart. These are bigger targets, if you will, is that 1813 an ounce area, which ultimately I think this needs to go to test this whole area as a fairly big reactionary resistance off of this huge reversal candle. I should say this huge reversal weekly candle. All right, so let's take a look at some coinage. Had some pullbacks. Let's go back to the daily here. Reset. So take a look at the high. Now, maybe this showed Saturday, I forget, but we've had a pretty solid resistance line show up. Remember the yellow or the orangish, whatever you guys call that color, can really hold some more strength in the red. I typically don't assign stronger weights to something unless this shows up after a decline of a significant period of time. So 68,000, this was the high. We've bounced off of what should be a pretty solid support. Next support for this is the reactionary breakout. And you can either use the bottom of this candle or somewhere in this zone of basically 53,000-ish per coin. Interesting to note, so if we look at the whole shebang, look at all the volume that took place in this entire move up here, which right. The value area high is right around that same area too, from a volume perspective over this whole period of time. So basically, you're looking at the last 6 months of this coin's breakoutage. In terms of volume on the left-hand side, it is a bell curve that you're looking at. Value area high can be a support area too. Interestingly enough, that it lines almost perfectly up with some of those previous areas. Keep in mind, whenever you use a market profile, you want to take bigger swaths of data, which just analyzes the volume, puts it on a bell curve, and assigns a 70% value area high range to it and a low range of where all the volume took place. Interesting to note, though, that this support low is actually missing notches in the profile. See this sort of like valley, if you will. It's called a low volume area. I call it a missing notch, which means that technically in a normal orderly auctioning process of any type of instrument that trades, you'd had what's called an incomplete auction down at this area. A lot of times that means in normal, we can't necessarily put Bitcoin in the normal trading category, right? But in normal trading, that area of low volume node can act as a magnet. So let's say you're trading the ES, right, which is the E-mini S&P 500 contract. From a longer term perspective, let's say you were short, the spiders, or you're short in whatever, you're short leaps, whatever. You're short the futures markets, and you are targeting a longer term area. This coincides with a whole bunch of stuff, including some moving averages. So that would be an area I would be targeting. More of a long term type of target. Who knows? It could come quickly, right? Could flash right down to there, complete the auction, and bounce back up from more. We've seen it happen time and time again. This is, we can't take any information from this yet because it's still really incomplete, but this is the futures-based Bitcoin ETF I've been starting to track, just started trading publicly. This does not hold actual coins. It just holds the futures markets, which is still proven to be not the most liquid, but it's getting there in terms of Bitcoin futures instead of actually buying the coin. At some point, I would imagine, the Bitcoin futures market, which I don't have up quoted on this screen, the data gets delayed coming in on this stuff into trading views, and a lot of times it has. The data just needs to be scrubbed a bunch, so I choose not to bring a lot of the futures contracts into this screen other than the ES that you guys see at the top, just for reference purposes. This is what's called a continuous front month contract for the ES as the S&P 500. Take a look on a daily chart, right? So anyway, that's the story. I don't think I really have anything more to talk about. A quick look at oil. It's been pulling back. I think this is of note. You'd think if we had continued problems with, transportation and fuel and, getting bottlenecks straightened out among all the supply chains, we continue to see strong demand for petrol-based products, right? And we're not. So I'm wondering if the little canary in the coal mine here is telling us something. Right. I wish everybody a great weekend. Happy Thanksgiving. Eat lots of turkey. Gobble, gobble. And spread the word. Let not risk management kill your trading account. I should say, that was dumb. Let's rephrase that. Let not the lack of risk management wipe out one's trading account. And with that, have a great weekend, everybody.